Jesse.
Hi, how are you?
Good. Thanks for being with us.
My pleasure.
So it wasn't a huge surprise that following the lowest period of volatility in the past 2 years, the markets finally broke loose last week. What's your take on it? And is this a signal for the longer term direction of the market?
Yeah, it's certainly been an interesting period over the last couple months. Obviously, with the big sell-off in March, a lot of people had broader concern over the health of these markets, and then they've obviously rebounded pretty strong from those lows. May, June, July, we had sort of 100 days for large cap alts where price was pretty stagnant, and 70 days for Bitcoin. We haven't seen sort of stagnation like that since 2018. It was pretty unprecedented. So it is dramatically refreshing to see the movement. Bitcoin is obviously sort of the most talked about coin here, and it's up about 26% or so off its range, depending on where you call that from. But it's been fascinating to watch a bunch of the other smaller cap or smaller large cap coins move. This movement really seemed to be led by ETH, which is up sort of 70% off of its stagnated range, and then Ripple XRP up 58% off its range. So it's been pretty fascinating to watch those markets really pull the rest of the broader cryptocurrency markets with them. And then thinking about sort of more broadly the ecosystem, looking at even smaller cap markets like Cardano or Link. Cardano's up 335% on the year, Link up 439. I mean, these are numbers we haven't really seen since sort of the end of 2017, 2018. So it's pretty fascinating to watch sort of the price action evolve over the last 6-7 months.
And do you attribute that to the OCC announcement, or just what's happening in DeFi or Grayscale, or is it a combination?
Yeah, I think following the March drop, a lot of retail interest shifted from this industry to the stock market. The stock market is very liquid, and you had sort of the Wall Street bets crowd and the Robinhood traders move there. It was a fun place to trade, and sort of rationality, the irrationality that we often see in the crypto markets moved its way over into traditional equities. And so I think that was a big part of the lack of volatility here. Watching Ethereum sort of lead this rally would lead you to believe that a lot of the DeFi hype has helped sort of move us out of this range. I think, broadly speaking, much of the DeFi ecosystem requires usage or staking or locking up ETH in various products. And so that can help drive demand or reduce supply into the ecosystem. And it's sort of the first time where people who haven't worked with a bunch of these DeFi-based applications, if they're now just getting involved in this space, the user experience of these applications is so dramatically different than it was 2 years ago. So a lot of the retail users who may have tried to do things with Ethereum in 2017 or early 2018 and didn't feel like the tools and the technologies are really up to the task or really friendly to use are now revisiting the space and seeing that a lot has changed there. So I think all of that in itself helps drive price, drive interest.
Do you think we can even shift the narrative and say that Bitcoin has moved from a safe haven asset to a risk-on asset because it's more correlated to the market than gold?
Yeah, I think periods of correlation change over time, and certainly over the last couple months or over 2020, there's been a lot of correlation with Bitcoin to the traditional stock market. But I think if you go back to the history of the asset, it's broadly decorrelated. This whole asset class, what we find interesting about it is we just think it sits outside the bounds of the traditional financial ecosystem. So sort of stocks, bonds, equities, debt, all of that sort of operates with similar levels of correlation where cryptocurrencies sort of operate in their own world. And we think that's a pretty compelling component of this asset class, why anybody should have it as part of their portfolio.
And in fact, JP Morgan just issued a report, I think Schwab as well, that millennials have a greater appetite for crypto versus gold, bonds, equities. Do you agree with this?
Yeah, I think that's true. And I think a lot of it just has to do with sort of the digital nature of the asset, right? Millennials have grown up with everything being digital in their lives, and with Bitcoin and the broader cryptocurrency asset class being entirely digital, it's a familiar place. It's a familiar set of tools and technologies that they're already used to. And so it makes sense. It makes sense to the millennial group.
Right. So what about Strix Leviathan? What initiatives are you focused on, or how are you assessing risks when entering these new assets?
Yeah, I think even with the recent price action, this is still a space where you get incredible volatility. And we saw that a couple of days ago with the huge sell-off in the course of 5 to 10 minutes, 15+% or more, depending on which asset, over a very quick period of time. And broadly speaking, this asset class is still very experimental. I think there's a lot of things that people don't understand about this asset class, how the economics work. Even people that have been involved in the space for a long time, we're all sort of exploring and experimenting together. And so as we think about this, it's really important to kind of understand that each one of these assets by itself is an experiment, and each one of these assets individually can effectively go to zero. There is no sort of one currency that will rule them all in this space. I think certainly Bitcoin has the predominant narrative because it's been around the longest. It is sort of the reserve currency of this space, and it's earned that right. But there are plenty of other coins and technologies that may at some point eclipse Bitcoin or may not. So at the end of the day, it's really important to think about this asset class as a portfolio of different assets versus a single coin, and understanding sort of the ramifications of some of these smaller cap coins. Like particularly, you see the numbers in Cardano or in Link this year, and they're really exciting numbers. But at the end of the day, liquidity there is much thinner than in the larger market cap coins. And so if you want to move $100, $200, $500,000 in and out of those coins, it becomes very expensive, where with the larger market cap coins, you can execute with pretty predictable slippage. So there's just a lot of sort of unknowns with the space, and it becomes really important to sort of map your world out as you think about entering.
Great. Well, we will be watching and learning alongside with you. Thanks so much for being with us, Jesse.
My pleasure. Thanks for having me.